All right, let's dive right in. Today, we are breaking down Zscaler's latest first quarter earnings for their fiscal year 2026. We're going to get into all the key numbers, figure out how the company is really doing, and see what's on the horizon.
But before we even touch the financials, let's kick things off with a huge question. AI is changing literally everything in tech, right? Well, as we're about to see, it's pretty much the #1 thing driving Zscaler's entire strategy. And their frankly impressive results.
Okay, so to really get their earnings report, you first have to understand what Zscaler actually does. They are a massive player in cloud security, and their whole world, their entire philosophy is built around this one core idea: zero trust. So think about old school security. It's kind of like a castle with a moat, right? Once you're inside the main gate, you can pretty much wander anywhere. Zscaler's zero trust model, totally different. It basically says, I don't trust anyone by default. Every single time you try to access an app or some data, it gets checked. It doesn't matter who you are or where you are. It's like having a bouncer at the door to every single room in the building. And in our world of remote work and cloud everything, that is absolutely critical.
So now that we've got that down, let's get to the first big question you ask about any company. Are they selling more stuff? Are they growing? Let's take a look at their top-line numbers.
And the answer is a huge yes. Zscaler's revenue shot up by a massive 26% compared to this exact same time last year. I mean, that's the headline number right there, and it tells you immediately that this company is expanding and fast. And here, you can really see what that 26% looks like in real dollars. They went from about $688 million in revenue last year to almost $788 million this quarter. That is a serious jump in just 1 year.
But okay, that's the now. What about the future? Well, think of these next few numbers as a peek into a crystal ball for the business. First up, their annual recurring revenue, that's the predictable subscription money, is now over $3.2 billion. Then you've got deferred revenue, up 32%. That's basically cash they've already collected for services they'll provide later. It's a fantastic sign of what's to come. And then there's this big one, remaining performance obligation, up a whopping 35%. This is all the money they're already contracted to get in the future. I mean, all signs are pointing to some seriously strong demand.
So sales are booming. That's great. But the real question is, are they actually making any money? This is where things get, well, a little weird, and it really shows you a quirk you see all the time with these high-growth tech stocks.
So check this out. You have to understand these two very different numbers. On one hand, according to the official accounting rules, what we call GAAP, Zscaler actually lost $11.6 million. But then you look at their adjusted number, or non-GAAP, and it says they made a profit of almost $160 million. So, how can they both be right? Let's unpack that.
Okay, so here's the bridge between those two numbers. The biggest piece of the puzzle, by far, is that huge $193.8 million adjustment for stock-based compensation. So this isn't actual cash that's leaving the company. It's just an accounting expense for paying employees with stock. Once you add that back, along with a few other non-cash items, you get a way clearer picture of how profitable the actual day-to-day business is.
Profit's one thing, but you know what they say, cash is king. So let's look at their cash flow and their balance sheet to see how financially strong this company really is.
And wow, this story here is just incredibly strong. In just 3 months, Zscaler's main business generated over $448 million in cold, hard cash. For a company this size, that is a truly staggering amount of cash to be cranking out.
And that leads us to an even crazier number, a 52% free cash flow margin. So what does that even mean? It means that for every single dollar in sales they made, 52 cents of it turned into pure cash that they can use for anything. That kind of financial firepower lets them invest and grow without needing to borrow money. That's the sign of a super healthy, super efficient business.
Now, you might be looking at their balance sheet and thinking, wait a minute, their total cash actually went down. But hold on, this isn't a red flag at all. The reason is simple. They spent nearly $700 million in cash buying other companies, like that AI security firm SPLX. So they're not losing money. They're putting their cash to work to grow even faster down the road.
So the quarter was clearly a knockout. But what does the company's leadership see coming around the corner? Let's check out their official guidance.
This quote from the CEO, Jay Chaudhry, really says it all. Remember that question we started with about AI? Well, management is betting the farm on it. Their AI security division is growing at over 80% year over year, and they think it's going to hit $500 million in recurring revenue this year alone.
It's their fastest growing part of the business, period.
And here are the official targets they've put out there. For both next quarter and the full year, they're calling for more growth in revenue and, importantly, more growth in that non-GAAP operating profit. This just shows how confident they are that their growth is going to stay profitable from a business operations perspective.
All right, so we've looked at sales, we've looked at profit, we've looked at cash, and we've looked at the future. So what's the big picture? What's the final takeaway? Let's put it all together.
Our verdict for Zscaler this quarter is improving, and here's exactly why. First, their AI security business is just on fire, growing way faster than expected. Second, the company is an absolute cash-generating machine, which gives them a huge war chest to invest. And third, all those future-looking numbers like deferred revenue and RPO, they all point to a really strong pipeline of business already lined up.
And that leaves us with this final, really big question to think about. Zscaler built its entire empire on this idea of zero trust. Now, as every company on the planet rushes to adopt AI, they're creating a whole universe of new security holes. The real question is, can Zscaler use that powerful foundation to become the essential must-have security platform for this whole new AI world?